Hello everyone, I'm Saurabh Sharma, Assistant Professor at SC College of Commerce. As you know, we started studying about the Provident Fund in the last video, and I taught you about the introduction that what the Provident Fund is and the types of introduction in the previous video. Let's revise first the previous topic, that is Provident Fund and the types of Provident Fund, and we will discuss the types of Provident Fund thoroughly. Okay, let's start. So let me take my board. So wait for a second. It will take time. I think 2-3 seconds. Don't lose patience. I will open it before the video started for the next time. Okay, this is open now. As I told you, there are four kinds of PF. That is, that is, first is RPF. Second is un-RPF. Third is SPF. And fourth one is PPF. The full form of all these is recognized provident fund. It means the fund which is recognized by the department is called recognized provident fund. Okay, and the fund which is created by the government, by the ministry, called the statutory provident fund, and in case of recognized and unrecognized, these two are the recognized provident fund and unrecognized provident fund. In case of recognized provident fund, the inspector or any other officer of the government recognize this fund. That's why we call it the recognized provident fund. And this fund, another fund, we call it the unrecognized provident fund, is created by the employer and nobody recognizes it. He doesn't take any recognition, any approval from any authority. He created from its own. Okay. So recognized provident fund and unrecognized provident fund. The difference between them is this is recognized between the organization, this is recognized by the officer, and this is not recognized at all. In whether in case of specially provident fund, the difference is statutory. Statutory provident fund. What is the meaning of statutory? Lawfully. Officially. Okay, and this is the public provident fund. This is made for the public. All these provident funds are made for the employees, but this fund is not made by the for the employees. This is for all. Okay, let's read from this. As I told you that we will study this topic thoroughly. The first topic is first type of recognized provident fund is recognized provident fund. How much and who will how much and who will there. Okay, investment up to 12% of the salary is exempt. It means how much is exempt and how much is taxable. It means investment up to 12% of the salary is exempt. What it means? It means that if you exempt 50, if you invest 15%, then 12% is exempt and 3% is taxable. Okay, and whether in case of employee eligible for deduction under section 80C. Okay, if the employer contribute up to 10%, it is exempt. And if employee contribute, it will get the deduction under section 80C. Okay. And interest up to 9.5% interest is exempt, and beyond that it is taxable. Withdrawal of accumulated balance fully exempt under the following five circumstances. Wait for a second. Fully exempt under the five circumstances. 5 years of continuous service. Okay, it means when you are withdrawing your provident fund money, then it will exempt if you satisfy the following conditions. What are the conditions? 5 years of continuous service. First is 5 years of continuous service. Second is if service period is less than the 5 years, then the reason for termination is discontinuance of employee business or ill health. Okay, it means if you are leaving before the 5 years, in that case you need to take the reason of ill health. Okay, and balance, then the another one is balance is resigning to RPF with the new employer. Okay, if you are resigning there to the new employer, then you will also get the amount without any taxation, where the balance is transferred to the pension scheme notified under section 80 CCT. Okay. In other case, is it taxable? Acceptable at the rate 10%, exempt under the following condition. Wait a second. Phone is ringing again. Whether in case of unrecognized provident fund, not taxable in the year of contribution, but taxable upon withdrawal. Not eligible for season 80C. Okay, there are some drawbacks to form the unrecognized provident fund, that is not taxable in the year for contribution but taxable upon withdrawal. Okay, it means it will taxable on maturity, not eligible for deduction. This is eligible for deduction, whether this is not eligible for any deduction, not taxable. That's the good thing, positive side here. Withdrawal of accumulated balance due. Okay, taxable as follows: employer contribution and interest thereon is taxable under the salary. Interest on employees contribution is taxable income from other source. Okay, not applicable. TDS is not applicable on that. Okay. Okay, these are the unrecognized. These are the another form: statutory provident fund, recognized, unrecognized, and PPF. Statutory provident fund is fully exempt. Employer contribution to provident fund is fully exempt, and deduction is also available for employees' contribution. It means best is SPF is best. Recognized provident fund exempt up to 12% and deduction is available. Whether in case exempt, fully exempt unrecognized but deduction is not available. It is fully exempt on maturity. Employer is not contributed in it, and deduction of FTC is available. But you must remember that the ceiling limit of deduction is 1,50,000. This is the whole ceiling limit. Thank you guys.